Please, folks, do me a favor, rate, review Lead Lag Live on Spotify, on Apple. Last year, I found out I was in the top 10% of all podcasts. Any kind of further momentum you guys can help with would be much appreciated. With all that said, my name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is Harry Dent. Harry, a lot of people are familiar with your name and have seen your work over the years, but for those who don't know your background, introduce yourself. Who are you? How'd you get involved, interested in markets, the economy, and what are you doing now?
Okay, Michael, I was when I went to college, I was into economics already. That was my interest, and I started my economics major. And by the third course, I said, "What am I doing? This is a nothing burger. It's all theoretical." And had a great finance professor and a great marketing professor. And I said, so I just changed my business major to accounting and finance in college. Then I got out of there and worked for large corporations for a few years, and then went back to Harvard Business School, where I really took business strategy and management and the broader stuff in marketing, and got out and worked with Bain & Company. Bain & Company is a great company. They steer Fortune 100 companies. I was surprised how much young people like us could do that back then. But I did not like working with large corporations, so I ended up doing the same thing. I moved to California. I took a turnaround situation for a small publishing company through a friend. And then I just started consulting to small new ventures. So what's great about new ventures is you're seeing the future. New ventures are doing new things. And I'm not talking about local drugstores and stuff, So new ventures doing new things in a time when the baby boom was still young and entering the workforce. And so by doing that, I had to study the baby boom. That was their clients, the young baby boomers, not the old, what I call Bob Hope generation, that the Fortune 100. So my shift went to studying the baby boomers. And next thing I know, the more I dug into it, I'm a demographic expert. Next thing I know, oh my gosh, I can predict the economy by knowing when people spend the most money, which is age 46. It's that precise on average, moving towards 47. It was 44 for the Bob Hope generation before. So I learned I could track the booms and busts of the past through a lag for the peak in spending, and I could project them literally 40, 50 years in the future. So that's how I got my start in the late 80s, when I pulled that all together out of my own independent research while I was running and turning around new ventures that were in trouble, where you also learn a lot fast and learn about new technologies. And then I wrote my first book. I started my newsletter in 89 and wrote my first book in 88, and then kept writing books, and my newsletter's still going. So I've been going ever since. I was not trained as an economist because I gave up on economics after my third course. I took everything else in business. I've worked in the largest corporations in business strategy and the smallest new emerging ventures, seen both sides of that economy. So I kind of got my own PhD after my Harvard MBA on my own, and ended up developing my own newsletter and stuff like that, and have been doing my newsletter ever since.
On that change from 44 in the Bob Hope generation to 47, is that related to just average lifespans and sort of midlife crises? I'm curious, what's the causation around the precision around that?
A little bit the lifestyle. It's mostly that more people go to college and then start their career later, and then they have kids. And if you're more, above average and stuff, your kids go to school longer. So it's more about people going to school longer, more people going to college. It starts the life cycle of going out in the workforce and then getting married and having kids a little later. So that's the biggest difference. And again, it looks like it's 47 now. Japan was always a year later than the US. Japan was 47 from the beginning. So there's slight differences in cultures, but not much. Everywhere I go around the world, 40, when I look up when people are earning and spending the most money, especially spending the most money, it's always between 45 and 49. Any country I can get good statistics on. So it's important to note that kids cost a lot of money to raise. They're a burden on their parents, on the governments, on school systems, and everything. They're even a burden on businesses when they first hire people straight out of college and have to train them. So all the action happens between when somebody enters the workforce, becomes productive, and I found only 2 to 3 years after they enter, after their training and early start, and then go up this steep spending cycle. Why does it steep? Because you're raising your kids and you're trying to get them through school and into the best colleges and stuff. And so the whole spending cycle is from 20 average age workforce entry into 46 for the baby boom, peak in spending when their kids leave. That's when people slow down and lighten up some. And now that's about 47 for the millennial generation. In other countries, I studied Japan and all around the world. So it's pretty simple. All I do, Michael, I have a lot of indicators, but my most important indicator, I take the birth index in any country, I adjust it for immigrants, which I can do with a simple formula because they come in at certain ages. So I can adjust that and move forward that immigration adjusted birth index for the peak in spending, 46 for the baby boom, 47 now for the millennials. And I can tell you where the economy, when it's going to boom and bust for decades ahead, for the rest of most of the listeners' lifetime on this podcast. That's simple.
Okay. So you often hear that term demographics is destiny, but seemingly people don't really explain what the destiny is. Right. It's like, what is the actual?
Yeah. And I say, you want to understand what's the difference between a 46-year-old at the peak of their spending and just bought their biggest house and raising their kids just before they leave the nest and and a 19-year-old that's in college costing everybody in the economy money, especially their parents. That's a huge difference in age. And then people in retirement, they slow down. They still, some of them earn money, some of them start spending down their savings, but the age curve is what really makes a difference. And what makes a difference in that age curve is that, like everything in life, new generations are born in cycles. People are not just born in straight lines. Huge surge in births from 1937 into 1961, the baby boom, biggest surge in births in U.S. history. And when I was in the 80s, coming in the economy and consulting and stuff, everybody was saying the U.S. was done. Oh, even the little boom in the 80s was just a rebound. We're done, and Asia's going to take over the world. I'm like, no, we have one of the biggest baby booms in the world, and we're just getting going. And in 1989, I predicted Japan was going to collapse, and they did that right away from 1994. Japan's never been the same since that peak because their baby boom came earlier and was not as large as ours.
Is it fair to say that in order to have real structural inflation, you have to have more and more births than deaths? It's as simple as, more births is inflationary, more deaths is disinflationary.
Yes, I'll go one more step further. And it took me another year when I got my spending wave, that 46-year lag in the U.S. and countries like that. A year later, I finally figured what causes inflation is the expense of incorporating useless up to that point, young people, not useless, they're learning. Okay, they're in a learning state. It was a workforce entry on a 2.5-year lag. That's what I found correlated with inflation. And that inflation indicator is just as accurate past and future in a much more complex thing as my spending wave. So inflation is not caused by births and deaths. It's caused by young people entering the workforce in particular. Births and deaths, would cause some inflation, but the biggest inflationary impact is getting people into the workforce, and then their productivity offsets any cost after that. So inflation is workforce growth. So, and the average person in the U.S. still enters the workforce at 20. It's an average between people getting out of high school at 18 and people getting out of college at 22.
Okay, so I think that's an interesting way to frame it, and also relates to Japan in a lot of ways, which doesn't have that much immigration, right? And obviously
they have no immigration. They have low birth weights way back. They were ahead of us with their baby boom peaking. And Japan had low inflation before we did, and they have zero to negative. They have to fight to get to zero inflation because they're aging. Let's put it this way. Young people are inflationary. Older people, which start to slow down and become a burden for retirement benefits on the country, are deflationary.
So I used to, when I was on the road presenting at CFA chapters, as I've been doing again kind of more recently, would make it a point that one way to solve deflation in Japan, and I would say it tongue in cheek, but I was serious about it, was ban contraceptives.
Yeah.
Right? Because you need
people
to
yes. And allow, they don't even attract, they don't want immigration. I mean, look, they have a great culture and they value that culture and they don't want to dilute it. Well, I mean, the U.S. gave up on that a long time. We've always been an immigrant nation. So we're not that way. And a lot of other countries aren't, and some countries are, but that's their thing. But if you're going to have that point of view, then you better encourage your citizens to have more kids and give them incentives, or at least educate them. Look, if you value Japan, our great country and our great culture, and we keep having less babies as we get more affluent because we've succeeded, and that's exactly, Michael, the formula. Affluence is what drives lower birth rates. It's affluent people that have fewer and fewer kids and want to have just one or two and get them into Harvard or Stanford. So Japan would be better to preach to their people, look, if we want to preserve our culture, not have to attract immigrants and dilute it, and not have to do other things like that, we all need to have an extra kid here and there. We need it for the good of our culture. I think the Japanese could rally around that if somebody told them that was the case. Otherwise, they were the fastest country in history. It took us 90 years to get as affluent as they did. They went from second world to first world in 3 decades. Korea followed them, and they suddenly got affluent, and they suddenly stopped having kids. And that's why Asians, I found, because I research everything, Asians, when they get affluent, react more by having lower births than do Westerners in the US and Europe. So getting affluent has really caused Japan and Korea and East Asia and China to boom incredibly. But on the other side, Japan hasn't been booming since the early 90s. They've been going sideways for decades because they don't have kids and they don't attract immigration to offset it. We don't have many more kids than Japanese, but we do attract immigrants in the United States and Canada.
How related is that, just in terms of history, to the sort of shift from an agrarian economy to more services? I mean, when most of your economy is based on farming, you want to have kids because they help you. I mean, that's the reality. Is that history of civilization. And then, so the affluence would probably be actually on having more kids back then. But is there an element of sort of that transition of economies over time that also puts us in a sort of more disinflationary, low birth type of situation?
Yes. I mean, part of the thing about that is back in the good old days, the farming days, it was also infant mortality. You had to have more kids to have 2 or 3 survive the high death rates in the young ages, particularly between age 1 and 4. So infant mortality going down and affluence are the 2 things that have allowed people to have fewer kids and then bring them up and educate them better, which is what everybody wants. The problem is the developed world, from North America to Europe and Japan and South Korea, East Asia, and increasingly China, and especially East Asia that's gone so rapidly. We've gotten affluent so fast and our birth rates have just dropped too fast. And I think really just public awareness of this might make a difference in people if they knew it was good for their country if they maybe had 2 kids instead of 1 or 3 instead of 2. But in the good old days, you would have 6 kids, or 12 like the Waltons, just to maybe have 3 or 4 survive, and then on and on and on. So on the farm, yes, on the farm, they directly can work on the farm from an early age after school and maybe come in there. And now most people, even if you were a farmer, most people who are the sons and daughters of farmers probably don't want to work on a farm anyway. So that was something that changed as well. And that'll never be the same. You're never going to get people to have 4, 5, 6 kids again, because also in an affluent society, it costs a lot more to raise kids, and they're not helping you out on the side on the farm. They're working somewhere else, or they're playing and partying in their free time. So all of these things change. The point is, Michael, all it takes is, my stuff is simple stuff. I mean, when I tripped on this 46, I knew peak and spending was 45 to 49. My research guy was saying he thought it was 49, but I kept narrowing down and doing work. I said, nope, Dave, it's 46. When I got that down and started applying that, it's simple. You just move forward the birth index for the peak in spending, and it tells you, it doesn't tell you everything about the economy, but it picks up the most important trends and tells you when it's going to boom and bust so far out. It's ridiculous. And economists are struggling to predict what's going to happen 2 to 3 years from now. And I can tell people what's going to happen when their kid goes into retirement. Okay. I can tell what the economy is going to look like for your kids when they enter the workforce, when they're at the peak of their career, and when they're going to die, and they're going to die later than us. And that life expectancy is going up. It's predictable. All this stuff is largely predictable. That's the great thing about demographics. It's solid, predictable stuff. It doesn't depend. People say, well, do you study politics? No, I don't. And I don't really care. My forecasts haven't changed and they haven't been affected. If I was in a third world country with a crazy dictator, yes. But in developed countries like Japan, United States, Canada, Europe, it doesn't matter that much who the Republicans or Democrats or these policies that slight this way or that. The fundamental trends, people growing up and spending money, affects productivity and spending more than any of these other facts, all of them put together. And it's simple. 46-year lag on an immigration-adjusted birth index. It's that damn simple. Just to see the economy. And again, I forecast in the late 80s, when I first pulled all this together, that the U.S. would peak in 2007 and go into a long-term slowdown into 2022 to 23. And guess why they've been printing money like mad ever since? They thought 1 year of money printing in 2009 would solve the recession and we'd be out of it. No, they've had to print more and more and more and more to offset a long demographic decline that will not turn positive until the millennial generation, which is not as steep or as long, but they will cause a positive spending wave and economic and productivity trend from late 2024 into late 2037. And I've been saying this for decades, okay? So that's that predictable. But we've been printing all this money to make up for an economy that's naturally slowing and creating 9% inflation when it was heading towards zero naturally. And what's going to happen? What happened is all this money went into financial assets. They didn't send us checks in the mail. They bought financial assets, bonds with it in the economy, which trickles more money into chasing all financial assets. And what we now have is the greatest financial asset bubble in all of history. We had a natural one with the tech surge into 2000. Now we have a totally artificial one. And bubbles do one thing, Michael. They burst. And once they get enough momentum, and we're very close to that, one more downturn, if the market makes a new low in the next few months, I'm predicting the next wave down will take us into a stage where people say, uh-oh, the government lost control. Yes, our economy's not healthy. And then they'll really clamp down on spending. And then it won't matter how much money they print.
You had mentioned incentives. Are there any examples in history where incentives for having more children was successful? What would those incentives even look like if I assume it's just monetary?
They are doing that in some countries. They are doing it in Japan. The problem is it has to be huge. The cost of raising a kid is $300,000, okay? And that's just to get to college, not through college. Just to get through high school, the average cost, and they told it, somebody said to me, $300,000 per kid. So when somebody in Japan says, okay, we'll give a $5,000 credit if you have a kid, that's nothing, okay? So governments would have to make it more attractive in more ways or have a bigger incentive to do it. But I'm telling you, Michael, part of it is just education. If people knew that if the Japanese understood that the reason that their culture is declining, their economy hasn't grown now for 3 decades, was all because, if every other couple just had one more kid, they would be in a whole different, the whole country would be more prosperous and have a much longer future and stuff and be better for their kids. I think people would do it. Enough people would do it. So part of it's educational and part of it's incentives, but it is. Governments to give enough incentive. Maybe it's got to be a $20,000 or $30,000 child credit, something more substantial. The payoff for that through a country, for decades down the road, where these people go and spend all this money and save, and affect the economy, it would be huge. I mean, people don't value, people don't know. In fact, that may be something the next week said, what's the what's the lifetime value of this or that, of different things in business. What's the lifetime value of a kid in a relatively affluent developed country today? It's a lot. And whatever it is, it's a lot. And if people knew that, and if the economy knew that, yes, why wouldn't you give a bigger tax credit or incentive to get people to have more kids if you're in Japan and that's your number one threat to your entire society? It's not war with China. It's not any of that stuff. We've been through world wars and not been as big a threat as declining births have been to all developed countries today. That's the biggest trend in the world. The emerging world's growing rapidly, even with slightly declining births, which we'll get more in the future. But the developed world is all peaking. Japan was the first to peak, and basically North America will be the last. But we're all peaking because affluence causes people to have fewer kids. And that means the future of your entire economy is going to be slower if you do not offset that or more by immigration or encourage people to have births. And it's easier to allow immigration and bring in new, highly motivated people. Guess what age the typical immigrant is? 23. You don't have to raise them and all that stuff and put them through school. They're already of working age, ready to go to work. The average 30, but the highest numbers of immigrants The peak numbers of immigrants coming to the U.S. are 23 years old. It doesn't get better than that. Free people coming on, and they're going to work their ass off, have kids, buy houses, make money, and advance the economy. And you don't even have to go through the government's cost of schooling them or parents' cost of raising them that $300,000 a kid. That's the best bargain as immigrant. And guess what we have in this country today? Everybody's into limiting it. Hey, I'm into regulating immigration, making more clear. Australia, where I speak, the most outside of the U.S., has got the best immigration policies, and they attract highly educated immigrants from Asia, largely Southeast Asia and China. They have the best immigration policies, and that's why Australia is not going to be fading in the future like Europe and North America, and more so East Asia the most. Australia doesn't have this problem because they have high immigration and high quality of immigration, and that's because they target the immigrants they want, but they're also in a part of the world where their immigrants come from the most up-and-coming part of the world, which is Southeast Asia and East Asia and China. So go figure.
How did other trends factor into this? So I'm with you on the affluence point. It makes sense. Increased divorce rates, less and less sort of a nuclear family over time. I mean, I assume those societal shifts also impact demographics. Personally, I think a lot of people, myself included, are surprised that the reminder of death post-COVID didn't cause a bit of a baby boom to some extent. I mean, you can argue that part of the baby boom side was because everyone started.
Also, a surge in buying houses. People valued owning a house a little more. Yeah. And then people more likely cooped up for a few years, more likely to maybe slip up and have a kid, whatever, or intentionally, whatever. Yeah, no question. But still, it needs to be built. I mean, really, people respond to cultural values. Nobody values their culture that I know around the world more than the Japanese. And if the Japanese just knew that if they want to preserve their great and even in their view superior culture, well, then you better have enough kids, or at least attract certain types of immigrants from the rest of Asia, or you're going to be a dying nation. And it is that simple. And Japan is dying. And I just did my newsletter. I just put a thing for Japan and projected out China. China is going, people think China's at 1.4 billion, now just up with India's just the same. India's going to go to 1.65 billion before they peak. China's going to shrink to 770 million. They're going to lose 43% of their population by the end of this century. That is suicide. If people knew that, something would change. So this, I think it's mainly an awareness problem. If people just knew, all we need is a little extra births in developed countries. We don't need people to go back to having Walton families, 12 kids or 6 kids or something. We just need to get our birth rates back above 2.1, which is the replacement rate. You really need a bit higher than that. So again, between immigration and births, that's the only way you have growth, because deaths are also predictable, and deaths have gone up. We're living longer, but that is slowed a lot in recent decades. Most of that progress was made between the 30s and 60s and stuff. And that, again, it's another predictable thing. You got to have more kids. You got to attract immigrants. And having more kids is a win-win for the world. Immigrants are just shifting from one country to the other. So again, it's just common sense. It's just people don't know this, Michael. It's that simple. They don't know it. Economists don't have a clue what drives the economy.
I think everyone on this Twitter space would probably agree on that regard. Okay, but let's go back to this point. And I know you've been out there and you've banged on that bubble drum for a while. And you and I both know that the Federal Reserve, central banks are very creative at preventing creative destruction. So the bubble either starts to deflate and then they suddenly reinflate it, and then it becomes even bigger, and they can never really quite walk away from that rinse and repeat cycle. How do you translate the view that demographics is destiny, we're in this kind of disinflationary long-term cycle you can't get out of, against an actual investment strategy where you're going to have policymakers that are going to print dollars because they can't print babies?
Yeah, right. They're going to come. I frankly, Michael, consider it directly to addiction. Doesn't matter what it is, heroin, cocaine, alcohol, cigarettes. There's things anybody can do today that are known to make you feel better. A cigarette makes you feel better for 5 minutes, A couple of drinks makes you feel better for a few hours. I don't know what the hell heroin does, but I wasn't about to try it when you see what happens to heroin addicts, But what it is, the same thing in the economy. You can do things today to enhance the economy short term, which cause long-term harm. And this money stimulus just causes people to feel the economy to grow more than it should, and businesses to invest more than they should in the future than the long-term demographics and natural trends and support. So and where does this money go? Why do you think we've had two giant bubbles? The bubble from 95 to 2000 in stocks was more natural. The economy was so good. And I predicted this. The baby boomers would be at their best. The best of the baby boomers, the acceleration of growth would be in the 90s. Inflation would fall the fastest in the 90s, both of those demographic factors. So that made that bubbly on its own. But after the crash in 2007 and 2008, no, the demographic trends on all counts were negative and down. And all they did was print more and more money. Well, printing money against the trend just causes companies and business and people to overinvest in things that don't pay off. And then that kicks you in the end. And the best indicator for this, Michael, and you tell me how many economists talk about money velocity. Money velocity tells you how much the entire economy, corporations, businesses, and individuals and families are investing their money in the future, okay? If money velocity is rising, money's being invested, getting good returns, and being reinvested. If it's falling, which has been falling straight since 1997, as soon as we got into the bubble economy, as soon as they started printing presses in late 94, we got the first bubble in stocks. And when that burst, the bubble shifted to real estate. And that burst, 2000, 2002, the bubble shifted to real estate with all this money flying around. And then we had a real estate bubble in 2006, and then that crashed. You know what's different now? Here in late 2021 recently, real estate is peaking and stocks now, both artificial bubbles peaking at the same time and crashing at the same time. So what you do is you create financial asset bubbles if you're just putting money in for short term, just like somebody creates an addiction. Oh, what happens when you drink more and more? Oh, it takes more and more alcohol to feel better. Oh, what do they call that? Progressive, okay? Takes more and more. So people get addicted. They need more and more until what they do, they just fall over one day on the sidewalk and die or end up in the emergency room. And maybe then they get off the addiction. We are addicted to money printing. We're addicted to making the economy be better today at the expense of tomorrow. And now tomorrow's starting to come because guess what? The Federal Reserve so overreacted to COVID, which was a short-term crisis in the first place, not caused by bad economics or bad investment or bad policies. It was just a damn virus like the influenza in 1918 to 20, same thing. They $5 trillion printed, $5 trillion in fiscal stimulus to offset that slowdown as if they should. And now we have inflation, at 9.1%. And my inflation indicator, you know what it says it should be? It's the best inflation indicator in the world. Predicted this downturn all the way. It says inflation should be closer to 1% today. So why are they having to tighten? Because they overstimulated because of COVID. Now they're going to have to over tighten. And then you're going to get a downturn when we have the highest debt ratios in history and the economy stretched more than history. And the demographics are still bottoming into 2023 before they finally start to turn up again. And that's how we could have a big collapse in the next few years because they're trying to manipulate the economy instead of nurturing it. If you want plants to grow, you give it good sunlight and soil and water, okay? You don't, if you overstimulate with fertilizer, you can actually go the other way. So we've overstimulated here. There's things you can do to encourage good investment and to have people to have more babies, encourage high quality immigration, as Australia does. And that's why their economy is better than ours, even though they look just like us, and except for their accents and stuff. And there's things like this artificial stimulus that are something for nothing, and they make you feel good today, and they kick your ass tomorrow. And I'm saying, I think we're in the kick ass stage from 2022 into 2024, and we could have the biggest downturn in stocks and the highest unemployment. In fact, here's how I say it, Mike. Think of 2008 to 9, which they cut in half. They cut it short. That recession should have gone longer and farther. think that we have this again, and now this time it's 50% worse. Stocks fall 86% instead of 57%. Unemployment 16% instead of 11%. On and on. Multiply times 1.5, and that's how the next few years could look. Why? Because we didn't let the economy cleanse itself of zombie companies that aren't productive and bad debts and stuff. So we have more bad debts than ever, more debt than ever. Record number of zombie companies that can just barely survive by not paying their debt service. But, that's a bad sign. And so the economy can't grow without recessions. Recessions are as necessary to the economy as waking and sleep are to human beings. Now, what's waking and sleep? Most people are awake 16, 17 hours and sleep 6 to 8, okay? Well, what's the economy? It grows for 26 years, like 42 to 68, Bob Hope generation, and then it slows down from 69 to 82 for 14 years. Waking, sleep. You can't not have recessions. Recessions cleanse the economy, knock out the bad stuff, unproductive companies, unproductive debts, and clear the way and make it easier. New companies thrive in recessions when the established companies are struggling and cutting back costs and bad investments. So trying to prevent recession is the worst mistake of economists and shows me that at basis, they do not understand how the economy works. It's creative growth and destruction. Creative destruction is part of the creative. You create new stuff and you have to shake out the stuff that didn't work. There's always mistakes. There's always failures. If you keep the failures in the economy, your productivity is going to go down because you're keeping a lot of bad workers and bad companies going when we could put people into better companies and better jobs if we allowed the economy to grow and shake out and encourage new investment again. The shaking out encourages investment. The park rangers are smarter than economists. They let most forest fires burn because it weeds out the crap. It weeds out the weak stuff and allows for greater growth. Park rangers let most forest fires burn. Economists think their job is to prevent every recession and never have a downturn, which shows they know nothing from my point of view.
I'm a big fan of Smokey the Bear. For whatever
doesn't he look wise? And he's happy too.
Yeah, I don't know.
Fat and happy. He's not fat and happy. I don't know who it is.
I want to get some of the audience here. Anybody who wants to come up and ask questions, follow me, check your DMs. We'll coordinate. I'll prompt you. Go ahead.
Well, it depends on how stupid we are. Okay. It's that simple. The other thing, insanity is doing the same thing over and over again, expecting a different result. What did we do after what have we been doing for a long time? But particularly after the 2008 crisis, which I predicted in advance would be the deepest downturn. 2008 would look like 1930. That's what it looked like. And instead of letting the economy cleanse and go through a deeper downturn, they turned on this money printing. So if we're smart, and it's going to take the people, the natural response of the Fed, it's just going to do the same thing more. Oh, we only printed $10 trillion during COVID, in fiscal amount. Well, we need to do 20. Well, that's doing the same thing, expecting a different. I tell people today, how could we possibly have had 10 trillion, which is 50% of our GDP, go in as outside stimulus in our economy and already be on the edge of another recession a few years later? Doesn't that tell you it's not working? So it depends on how smart we are. I think the key is the economy has to fail enough for people to say, and then they have to come up and start saying, well, we didn't do enough. Now we got to print 20 trillion. And then people just finally say, okay, I'm sorry. We're not, we kind of knew it didn't, printing money out of thin air always sounds a little shaky to people. It does. It's something for nothing. But if it seems to work, people start to say, well, maybe it's good. And highly educated that's a good, but the government keeps saying they're doing the right thing. No, the right thing in 2009 would have been $1 trillion in stimulus to get the economy off its ass and then let free market forces work again. And if it says it needs more recession, let it have more recession. That would have been the smart thing. No, all they did was get addicted now to more and more and more stimulus. So are we smart enough as people and citizens and some politicians to finally wake up and say, oh, we did this already. Why would we do what we just did from 2009 forward, create another bubble? And then the bubble bursts. People start getting, if you create a bubble, it bursts. If you overstimulate, you end up creating a bubble and it bursts. And there's nothing worse than bubble bursts because they're the most violent downturns. We have not had a downturn in our life to compare the 29 to 32 crash. That was the last bubble era. That was a natural bubble like 2000 to 2002. but it was worse. But that sort of thing is such a slap in the face. I'm just hoping people wake up. And then when the central banks say, okay, well, we just need to double down, do more, people start saying, no thanks. Or that the economy goes, what I said earlier, if I think the stock market's seen its first way down, that was 38% on the NASDAQ, okay? That's the first thing that told me the bubble finally burst, because a bubble can take a 20% stock correction or slow down and go right back and bubble up. But history showed me once a bubble burst about 30 to 40%, it takes the momentum out of it, makes the bubble questionable, and then it can go ahead and crash further. So if the stock market, despite, you got to remember, they've been forced to tighten by their own overstimulus. So they miscalculated. If they'd have been more modest in response to COVID and just said, hey, it's a virus. This is nobody's problem. Hey, the economy's a little slow. We'll get over it when the virus lifts. If they hadn't overreacted, but they did. So do they learn a lesson? And more important, do people start objecting and say, why would we do this again? We already did this. And now we're back in another major stock crash. Why? Because we created another bubble. So it really depends on how smart we are. And I'm just hoping a couple countries, hopefully the United States, because we do tend to be smarter than the average bear out there, or maybe it's Korea, when a couple countries get it right and say, no, we're not going to do this time. And somebody sets the example and somebody shows by not fighting the downturn, you actually have the little forest fire and you come out of it healthy again sooner than other countries. Somebody needs to prove that if you do the right thing, what's happened thus far, Japan had the bubble for you. People forget, Japan had the biggest real estate bubble in the world in 1991 and the biggest stock market bubble just before that in the late 89. They had a great bubble and it burst. And then they've been living off of money printing. They've been out printing us for a long time, and they've gone nowhere and had zero growth for 3 decades, okay? So when do we learn, okay, this is not the solution. The solution is to let debt restructure, let zombies go on there and give incentives to reinvest and reevaluate your immigration policies and your public communication about the virtue of births or whatever you need to do and get on the right track, not to print money and take a drug that makes you feel better and then you crash and come down like every addict does over every artificial drug invented in history. They don't work. They work short term and then they kick your ass. So what it's going to need needed here is the economy's got to go down hard enough to people to get that we just did this, all this stimulus, all this printing money out of thin air, and it didn't work. It kicked our ass even harder than 2008. So I'm looking right now, all the stock market needs to do to me to go into another crash and to get people's antennas up is to break that 10,089 low on the NASDAQ. That's what I'm focused on my research and my newsletter every week, every day. You know, we keep bouncing on that. If we can break through that, the market will go down harder just out of pure panic. It doesn't matter what the Fed says at that point. And once it goes down, the next wave should take us down 60% instead of 34% or more. And that's when people will say, I don't know what the Fed's doing. I don't know what they're saying, but something's wrong. And I ain't going to be spending as much money. And I'm going to watch where I put my investments. And then the Fed really loses their power. So the Fed, the central banks have to be discredited and lose their power. And what better way than to panic and have $10 trillion, 50% of GDP stimulus, fiscal and monetary in 2 years and have the economy crash anyway, to lose credibility that printing money out of thin air is not the solution. Damn it. People will get it if that happens. Well, yeah, and printing massive amounts of money only devalues your dollar. Let me tell you what I see a couple decades from now. Bitcoin. What is something new that is not tied to any country, that is truly global, that is truly digital, which is the new economy increasingly? Bitcoin and cryptocurrencies could become the standard for a new global monetary system that nobody can manipulate. The problem is the dollar is the reserve currency, which kind of favors us in some ways, but disfavors us. A strong dollar hurts our exports. Well, fortunately, we don't export as much as our economy as most European countries and Japan, so we can take it. But it's not a good system that the dollar, just because we used to be the biggest country in the world, is the reserve currency. If Bitcoin becomes more accepted, and it's growing like mass, and I think it will be in the next couple of decades, I think Bitcoin could be that standard. And for Bitcoin to be worth more than all the gold in the world, which used to be the standard, but doesn't grow with the economy, is not useful in the digital economy versus the old physical economy. For Bitcoin to be much as worth as all the gold in the world, 500,000. To be worth maybe more than that, up towards 1 million. I have a model that tracks Bitcoin with Amazon and the dot-com revolution just 22 years before it. And there's two of these revolutions in every 45-year technology cycle, which I didn't cover today. The demographics are more like a 39 to 40 year, the technology cycles. You get two of these surges. So I think crypto is the solution. And Bitcoin, I think, is the only thing I see that could very well grow enough and accept enough to become the digital standard for money globally that has nothing to do with US dollars or French dollars or whatever dollars. It really is a global objective thing. And that's what I see happening. And Bitcoin's going to go, my forecast for Bitcoin bubbled up just like Amazon and the dot-coms. Amazon, people don't realize, went from 6 in 98 to 136 in 2000, the top of the tech bubble, and went right back to 6 by 2001 to 2. Bitcoin, I'm forecasting goes 3,000 to 4,000, and that's when I would load up on that baby, because I think it is the next wave after the dot-com revolution, and Bitcoin would have to grow substantially to really be that standard. And I think that is the solution rather than a dollar-based solution or a basket of currencies. Another muddy kind of screwed up solution. The problem is government should not be able to just print money without abandon, without immediate punishment. And that's what I think a global standard would do better. And the US has been able to get away with this. We have printed more money relative to our economy than most other major economies. And part of that's because we can, and part of it's because we're the standard, and all, which means we can. And I think it's a bad thing. So I would love to see the de-dollarization of the world, frankly, but you do need a standard, something has to replace it, and that will happen over time. So I think, and I'll tell you another thing, what went up in 2008, the treasury bonds, the long 10 and 30-year treasury bonds went up 40, 50% in value when stocks, real estate, and commodities and gold finally crashed. And so I see the dollar going to go up maybe 20, 30% in this, and our treasury bonds, a 30-year treasury bond, could almost double in value from recent lows, and the 10-year treasury bond. So TLT and ZROS or ETFs you can buy, average 20 or 20-year treasury bonds. That is the number one thing I'm recommending. Instead of just going to cash, get in the safest bonds, because money has to go somewhere. And in 2008, it was those treasury bonds that beat everything when everything went down. And you got to remember, from my view, we did not see the real downturn in 2008 to 9, because that should have been 30 to 32. It should have lasted into 2010, and stocks and real estate should have both gone down a lot more. Stocks should have gone down 80+%, and real estate 50% instead of 34. And then we would have cleansed the economy and be more ready to grow again. So that's what I think has to happen now. And it'll be a huge benefit to millennials, young people today. And it's going to kick the baby boom's ass, because they own all the financial assets. And it's going to kick, the richest people, the top 10% own 88% of the financial assets, okay? And they're 40% of the spending in the economy. That's 1%, I'm sorry, on the 40%. But so this downturn is going to hit the people who own financial assets the most. That means the most wealthy. So people worried about income inequality, the economy has a solution for that. A downturn. Deflation is the solution to not just normal CPI inflation, but monetary inflation. You got to remember, what we would have gotten in the past from stimulus, normal stimulus, fiscal stimulus, is you get consumer price inflation. We did not get that after all this 10 trillion stimulus. The money went largely into financial assets. So what we have is created a new, bigger bubble than we naturally had in 2000. Bubbles always burst, and they need to burst. Because when financial assets gets overflated, that's a weight on the economy and makes it impossible for younger people to invest for the future. It only boosts the dying older generation, which is baby boomers today. So it's bad for our economy. This financial asset bubble is also an excess that is not good for the economy. It's a misinvestment of capital.
There was a question in the Twitter thread around what can citizens do about all the things that the Federal Reserve and the government does. And I'll tell you, in late 2020, I was very vocal on Twitter saying we have to stop giving out checks because every single round of stimulus widens the wealth gap. Right. The effect of stimulus is more concentration of wealth. Right. So
this stimulus goes into financial assets, which exactly exacerbates the inequality of the rich getting richer. It only makes that more.
Right. The problem is it's hard to get people to make that link because they see the check in the mail and they have to pay their bills. Right. So is there any way other than, discipline or education, whatever it would be, that you think citizens of the US, of other countries would say, actually, you know what, we shouldn't be sending out checks because, it's hard to say. All this sounds great in principle, but in practice, it's almost an impossibility for somebody to think that way.
Well, first of all, it's kind of too late. First of all, people won't, and they like the checks anyway. And it's too late for that. So basically, the only thing that's going to solve this is for the very policies, which to me, as soon as the word money printing, that every time we have a slowdown, they just print money. That's like, okay, I'm feeling bad. I just go take some heroin. I mean, can I feel absolutely great if I drink half a bottle of vodka or take some heroin? I can absolutely be guaranteed to feel good for how many hours that lasts, okay? That's what people do. Nobody considers that a good habit in society, okay? It's not a good thing to be a drunk or a heroin addict, okay? To have a few drinks at a cocktail party, fine, okay? But that's not what they're doing. This has to fail badly. It's too late to stop it. The Federal Reserve, if they don't keep doubling down, it's not just to go to neutral right now, we would go into a recession, okay? They have to keep doubling down, which they tried to do until their own excesses over COVID got in their way. In other words, they miscalculated there. They overreacted there. They didn't have to apologize for COVID. It was nobody's fault, okay? Like a recession would be considered that by politicians or economists. So they blew it. Right now, all you can do as a citizen is get the hell out of the way. You get your money out of real estate you don't need and not going to live in the rest of your life. You get your money out of stocks and even gold. Gold will go down to about 900 to 1,000, and that will be far less than the stock market. It'll be far less than other commodities that have already gone down more and will go down more than that. Gold will hold up, but gold is not the answer either. I'm telling you, by studying 2008 and the Great Depression, which are the only things relative to this, when a bubble happens, whether for good, for artificial or natural reasons, when it bursts, certain things happen, and there's only one thing you can do: get out of the way. You got to go from all financial assets into either cash or, way better, into the highest quality bonds, which are the best in the world. I don't care. Yeah, are we in debt? But yes, Europe's more in debt. Japan's way more in debt. We're still the best. We're still the best currency, the best country in the world. Our highest quality 10 and 30-year treasury bonds, like in the 2008 crisis, will go up in value substantially. I don't mean 10%. I mean 40, 50, 60, 70, 80%, like in a 30-year. You can make money on a downturn. And then when everything's on its bottom, stocks are down 80 to 90%, real estate's down 40 to 60%, then you can buy stuff at the opportunity of a lifetime and profit on that for decades to come. And so can your kids. So that's the secret. You just have to get out of luck. Nobody's going to stop this. It's gone too far. And it's really hard to talk an addict out of being addicted. They have to fall on the pavement and fail so bad that they quit. You can't talk them out of it. You can't talk the Fed out of this and stuff. All you can do is protect your own assets and get out of the way. And I've told people for years, if you can live in the exurbs of a major city instead of right downtown or the closest suburbs, then you're going to feel the pain less, both in real estate values falling and whatever. There's going to be some civil violence. People are going to be pissed if the economy gets as bad as I'm saying. And so, you have to look at it that way. This has gone too far. It's too late to stop it. They had a chance, but they doubled down again and then, did the COVID thing. React again, COVID. Why do you have to react to COVID? It wasn't even an economic mistake or failure. They overreacted more than ever. They've already blown it. You just got to get out of the way and protect yourself and everybody. That's all you can do. And your business. Sell assets you don't need. Get out of businesses that are struggling. Free up that money to go into cash so you can reinvest in the best part of your business. I was a business consultant before I got into this. A Bain company, for crying out loud, into small businesses. I know how to turn around a business. You cut costs, you value what's really growing in the future, you cut costs, sell assets you don't need, and redirect that in a downturn or a struggle into the new assets to grow in the future where the real growth is. So you have to understand where the trends are going, and you have to get out of bad assets into good ones. And most people are in a lot of stocks that are not the future anymore. They've just done well because they did well, and now this bubble inflated them up. Even Amazon's a pretty damn mature company now, okay? There's a whole new crypto thing and a whole new technology thing emerging, which is going to be the next big thing. And those things will go down the most. That's why I would buy Bitcoin at 3,250. That's my target, 4,000, somewhere in that range, in a heartbeat, not think twice about it. And you know what? If it goes that low, most people say it was a hoax. Was Amazon a hoax when it went down to $6 from 131 in 2001? No, it wasn't. It was the next big thing. It just got bubbled up and burst. That's when you should have bought Amazon at $6 before it went to 3,500 10 years later.
Let's do one more question and then wrap up because I only have a few more minutes left here. Let's go to Mike for a question and we'll wrap up here. Go ahead.
It's a great question. Again, Bitcoin, it's blockchain technology. Bitcoin is just really a symbol of that, an example of it. This is not a worthless, invisible coin that's just been bid up by speculation, although that's also the case. The technology, blockchain technology, it's complex software that builds on each other. That's why they call it a chain, a blockchain. This is a way to build a whole digital base for a whole financial economy that is far more efficient. You have to see the last wave of technology was the internet. The internet automated and basically information and made it more accessible and cheaper. What we're doing here is automating the biggest thing in the world. And you know what the biggest thing in the world is that I can calculate? Financial assets. What we've been talking about, $600 trillion is what there is in the world. Best estimates, and I had to dig deep to get this, but it's an accurate number, roughly $600 trillion, 6 times GDP. This whole blockchain technology is to restructure the whole financial money and asset bases and make them much more fungible and tradable and useful and choppable and everything, make it more efficient. It's a big deal for the future, especially when even emerging countries, the other 6 billion going towards 10 billion, are going to become at least low level of developed countries and have more wealth for the first time. Everyday people around the world don't have any wealth. Go to third world countries. They have low incomes, but they have no wealth. This is about financial assets and money transforming that. That's why this revolution in blockchain, forget Bitcoin. It's just a symbol of it. And it could become the standard because of that. That's why I value Bitcoin. Ethereum throws off applications. So it's a generator. That's something more real. But you do need a standard. So this is in its infancy. You can't judge something in its infancy. Amazon looked like a little side business in the late 90s when it was emerging, okay? And it became the greatest freaking retailer in the world. Nobody thought people would buy this much stuff online and all types of stuff you don't even think, including TVs and stuff, and shipping them halfway around the world, okay? So this is what happens. It's early stage. And it's had a baby bubble. I track it with Amazon and the .com. There's an internet index for the .com and Amazon. I track Bitcoin versus Amazon. I don't yet have a crypto index good enough to track versus the .com. I'm telling you, the same exact thing is happening 22 years later and nobody sees it. And Bitcoin is going to be the next big thing, but only because it's the software basis and standard for something much bigger that's going to transform things in ways we can't see today. Who would have thought when the first automobiles came out that every day rich people had them and they'd only drive them so far in cities? Nobody thought everybody in the world would have 2 freaking automobiles.
I think that's a good place to wrap up the space at the top of the hour. Again, this will be folks under that Lead Lag Live banner. Special thanks to those that came up.
Real quick, free weekly newsletter at harrydent.com. I have a paid newsletter, but our free newsletter is great. You can get to know us, harrydent.com. Just get on that free newsletter.
Perfect. Thank you, everybody, for joining. Thank you, Harry.